Today's webinar by Hotspotting, in which I spoke with buyer's agent Rich Harvey from Property Buyer about the impacts of the virus crisis on real estate, was the most watched webinar ever staged by Hotspotting. We had lots of questions coming in live from the record number of registrants that we had. We answered as many of them as we could live during the webinar, but we didn't get to all of them. So in a series of daily broadcasts, starting with this one, I'm going to respond directly to many of the questions that were received during the virus crisis webinar. So let's get into them. Ella asked, is now time to be buying an investment property? She said, we're ready to go, pre-approval and process. Then all this happened. Do we wait? Will there be tenants in the market? And I think this can be a very good time to be looking for an investment property. There will be opportunities to buy well in the current climate. Buyers will be able to negotiate from a position of strength because most investors will follow the herd and they will retreat, which means there'll be good opportunities for those that remain to buy well, those who are able to think and act independently. Just be very careful about choosing locations that have good credentials for long-term capital growth. Simon asked, will this situation promote longer-term demographic shifts to more people working remotely and strengthen property growth in the regional areas? And I think this is a trend anyway. It's helped by the boom, certainly helped the boom in regional Victoria in the last 2 to 3 years, particularly for towns 2 hours from Melbourne, and also the Central Coast area just outside Sydney. And the current situation will enhance the trends towards people working remotely and therefore making lifestyle changes. And I think increasingly there are fewer and fewer reasons to be close to the CBDs in our city. Frida and Anthony both were asking about the Perth market, and I think that the Perth market has been heading into a recovery phase with vacancy rates reduced, rents rising, sales activity increasing, prices starting to rise in some suburbs. The virus crisis is likely to temporarily stall that recovery, but the underlying economic fundamentals have improved in Western Australia. So once the virus situation has passed, I think the Perth market will resume its recovery and there will be opportunities in the intervening period right now for people to buy pretty well. Certainly at Hotspotting we see Perth as an opportunity, generally speaking, for investors, and that's a regular part of our message. Shanaz asked, auction clearance rates will change now that the first wave of lockdown controls come into effect. Do you predict the market will continue to be healthy amidst rising unemployment? And I do think the market will continue to maintain a good level of health. The rise in unemployment undoubtedly will occur, but it will be temporary. If it was long-term, extending over a year, then it would have a material impact on markets and property prices. But I expect it to be short-term. Auctions undoubtedly have now been curtailed, but that in itself won't be detrimental to property prices because only about 10% of sales across Australia happen because of auctions. It's going to cause some vendors to withdraw their auction properties from sale, and that will exacerbate the shortage that we already have in property at the moment. Dom asked, as a financial broker, we see impetus for pre-approved finance clients seeking to close deals fast as the banks shift policy on who they will approve loans for. I think there'll be a rush to get a deal locked down. My response is that's an interesting take on the situation. Vendors have a strong vested interest in keeping mortgage business flowing, and the lending space is very competitive. As you suggest, some lenders may be against certain professions, but second-tier lenders will be seeking to take business from them. Phil asked about most of the focus was about buying. He asked questions about what about selling in the next 1 to 2 years, and my response is I think the scenario is going to be well beyond, going to be over in 1 to 2 years. Before the virus crisis there was a significant shortage of listings, and that's likely to be exacerbated by the virus impact, so there will be opportunities in certain locations for people looking to sell because there's going to be relatively little competition from other sellers. But looking beyond that long term, I think by then the virus crisis will be over. Glenn asked, do you think vacancy rates will rise in the short term with unemployment increasing? And my response is I think there will be some increase in vacancy rates, but mainly because owners who had been using Airbnb rather than permanent rental situations will be seeking permanent rentals, and that's happening right now. So there's going to be more property coming into the permanent rental market, but most markets should be able to absorb that because vacancies are very low across Australia. James asked, Can you help unpack how a potential 10% unemployment rate cannot have any impact on property prices going forward? And my feeling is that if we had 10% jobless long term, it would definitely impact on property prices, but we won't have that. We'll have a short, sharp spike in unemployment, but it won't last long enough to cause a significant fall in prices. I did see a forecast today which suggests a worst case scenario of 10% unemployment, but not long-term, improving about 4 to 5 months from now. Now, I'd like to end with this point. While a lot of businesses are being forced to close and many people are losing their jobs, at the same time there are many businesses that are thriving in the current environment, and those businesses are hiring, not firing. Woolworths, for example, has just announced that it has 20,000 new positions available across the country. Pharmacies and supermarkets have just been given approval to trade 24 hours a day in New South Wales at least, and they will need to hire more people. Coles has just announced that it has 5,000 positions available and will probably need more. Many other companies have also announced that they are hiring. BHP needs an extra 1,500 people. Telstra has announced a requirement for several thousand new staff. Commonwealth Bank says it needs 500 new staff. Centrelink, not surprisingly, needs a lot more staff, and it currently expects to hire at least 5,000. And the Chief Minister of the Northern Territory wants everyone to know that the agricultural sector up there has a shortfall of 2,500 workers because those positions, like fruit picking, are normally taken by backpackers and other seasonal workers that they can't now access. And there are many other examples. So there is at least some hope for all those people who sadly have lost their jobs in the current shutdown caused by the pandemic. Now that's it for now. I'll be doing more of these broadcasts focusing on the key questions we received in the recent webinar in the next few days. If you have any comments or questions, you can contact me, Terry Ryder, on ryder@hotspotting.com.au. Bye for now.